Everyone, next up we have Splash Beverage Group Inc. It trades on the New York Stock Exchange American under the symbol SBEV and is an innovator in the beverage industry. Splash Beverage owns a growing portfolio of alcoholic and non-alcoholic beverage brands, including Copa di Vino, wine by the glass, salt-flavored tequilas, Pulpoloco, sangria, and TapouT, performance, hydration, and recovery drink. Please welcome its president and CEO, Robert Nistico. Welcome, Robert. How you doing today?
Very good, Anna. Lovely to see you again.
Great. We're excited to hear some updates, so take it away.
All right, great. I will jump right in and save some time for questions, hopefully. Welcome, everybody, and thank you for joining. We appreciate your attention very, very much. I'm going to read every line of this forward-looking statement. Actually, I'm not, just kidding. So we will move quickly here. As Anna perfectly introduced us, we are a portfolio company, which we believe is an important distinction for a couple of different reasons. We believe it dilutes risk because we spread our revenues across multiple brands within the beverage space. But more importantly, from a financial standpoint, it really helps ratchet down COGS, cost of goods, and increase margins over time because we share the same vendors across a line of brands. We buy plastic from the same people, cardboard from the same people, et cetera. And today, it's even different than it was a decade or 2 decades ago. We can even share distribution platforms as well. So it's really a great vision for us for growth and long-term profitability. And our team, which we'll demonstrate here briefly, our management team and our board is really second to none. So that's Splash. I'll keep moving here. Investment highlights. I just mentioned our management board and team. Really, it's a who's who of folks in the beverage space. I'll cover that here in a moment. Distribution is absolutely critical in the beverage industry, like any industry, but especially beverage. It's very difficult because there's a huge bottleneck, and if you don't get through that bottleneck, you can't put your product on shelf, and ultimately you won't have any revenue. If you're not on the shelf, you're not for sale. And then part of our core values are pre-existing brand awareness. A great example of that is TapouT. TapouT's a 24-year-old brand. Not necessarily in beverage, but that brand awareness gives us a certain level of both aided and unaided awareness. And when you put product on the shelf in a national retailer like Walmart or Winn-Dixie or someone, people see it and it's automatically credible. So that's a really important part of our go-forward strategy. And pure innovation in the case of salt tequila, it's not a new idea, but it's new to the tequila segment, easy for me to say. And no one's done flavors for tequila. We're 100% agave and 80 proof, and we have lovely essence of flavors, and we'll get into that in a moment. And of course, the industry itself is a fabulous industry, and we believe that it's recession resistant. A little bit about our team real quick. Myself, I'm all beverage, a little bit of private equity background, but I've been doing this for about 28 years. I love what I do. It's in my blood. My background was Gallo. It was Republic National as a number 3 person there. Came back outside, went to work for Diageo, and then took this little brand called Red Bull from 0 to about 1.6 billion in annual sales. Tremendous experience. The founder was very generous with us, and it was a great time in my life. And it's important that former success, it's not a guarantee of future success, but in this case, it drove relationships that are long and deep, and that's really important in the beverage space. Ron Wall, since the last time I was on the program, is new to the company, about 4 or 5 months now. He was our CFO, and he was the CFO for William Grant, running about $1.8 billion in 50 countries, finance and accounting. We're honored to have Ron join the company, and obviously setting ourselves up for future growth there. Bill Meisner, our president and chief marketing officer. Bill has been president and CEO of many companies you know of. He was the lead person at Fuse, at Sobe, Sweet Leaf Tea. He personally did the development work with Talking Rain for a little brand called Sparkling Ice, and also did the turnaround job at Jones Soda when they were struggling a little bit. I'm going to skip Jeevers for 1 second. And Aida Aragon, I wish I could clone. Those of you who follow us, all this retail action that we've received authorizations from national and regional chains, it's because of Aida. She's amazing. She also put Muscle Milk on the shelf for the Cider Sport Pepsi transaction. Former fitness champion herself. She's really a tigress, and I wish I could clone her. And I put Sanjeev, he's part of our key management team. He's actually an independent contractor, but Jeevers is very important to us because for 2 reasons. He's a savant when it comes to formulation. There's no one I've never known better than this guy. He's considered probably a top 5 nutritionist in the country, ran Stedman Hawkins, et cetera. He was roommates with Tom Brady and Brian Greasy during their undergrad years. And that's where he started his nutritional career. So what's even more important than his abilities is his contact list. He's written over 600 nutritional plans for professional Olympic athletes in North America. So when we are at arm's reach with TapouT, for example, which we're getting very close to, we'll ask his friends that he's in contact with on a daily basis to tweet and Instagram for us, and we get that for free. I mean, absolutely nothing. So really an amazing team we have here on the management side. And then briefly on our board, Peter McDonough, President and Chief Innovation and Chief Marketing Officer for Diageo globally. You can't get any better than that. He's a brilliant guy and a gentleman. We've known each other for a decade. Honored to have him on the board. Myself, of course, founder, and I'm actually the chairman of the board. You already know my background. Justin York, really sharp M&A and capital markets person, really instrumental when we went public. In fact, he represents 3 funds that are, I believe, a top 3 investor in Splash. So a lot of skin in the game there. Candace Crawford joined us about 6 months ago. Candace is amazing. She scares me to death. So I made her the chair of the audit committee because she's that exacting. We'll never ever have to worry about a nickel being out of place or a filing being late between her and Ron. Top 10 executive coach. She did Zico. Palm Wonderful as their CFO, I think, and just a brilliant woman. We have an open spot actually right now, which we're interviewing for. Top M&A capital markets person. And then in an informal advisory role, we have President of Bacardi, Pete Carr. He is a dear friend and worked for us at Red Bull, Nestle presidents, et cetera. So it's really quite a who's who in beverage and consumables. I really have already covered this, so I'm going to pass right past this here. So, the beverage space itself, it's massive. People drink when they're happy, they drink when they're sad, they have to drink to stay alive. So that's why I made the statement, we believe this is recession resistant, and it is. We're currently, the numbers about a year and a half ago, about $1.6 trillion dollar size market. It's growing by, I think, 3 years, they're predicting this thing's going to be over $2 trillion. So it's a huge pool we're fishing in, which is a really nice thing. And why a lot of people actually get into beverage, just based on the size. So I will continue from there. And, the transactions that you see within beverage are really amazing. And it's a double-edged sword here, everybody. This is really interesting to me. We have a simple concept, right? You have an idea, you go to the zoo, you pick a color and an animal, and you put it in a can, and you want to put it on the shelf for sale. Sounds easy. It's easy to understand. The difficulty, the other side of that double-edged sword, is how tough it is to get to that point. It's one of the things we do really, really well. We'll talk about distribution in a second, but the payday is what this slide's about. If you do manage to navigate those waters, when you exit in beverage, you're exiting on a top-line multiple. And it's a nice number. Even in today's negative economic environment, you're still getting really nice multiples of 5, 6, 7 times top line revenue. So that's why people see dollar signs and they get into this. But we're very well experienced, and we know the long, arduous, frankly expensive process to get to the point where we are today. But when you see things like this, Coca-Cola paying $8.3 billion for body armor. That's the space we're playing in, and it's exciting. This is just a comparative analysis. You guys can pull this all down off our website. I'm not going to walk through this, but it's by segment for beverage, just supporting what I just said. And then this is probably the most important slide on the whole deck. It's about distribution, and you know, it sounds so silly and so commonsensical, but you'd be amazed how many people miss this. And if a beverage company fails or a startup fails, it's because of this. They underestimate the difficulty and the importance, believe it or not, of distribution. You know, I made a joke the last time I met Anna about Anna's berry flavored iced tea. If Anna Berry's iced tea isn't on the shelf, it's not for sale. So this is critical. So not only are we distribution experts, we've hedged our bets and have the ability to distribute in any channel, route to market necessary. So when I was running Red Bull, I had the luxury of giving away Red Bull distributorships for free, mostly in the Miller Coors network, a little bit of Budweiser. You can imagine a lot of those folks, those men and women are appreciative, we'll say it that way. So at the very least, we get our phone call returned, where a lot of people won't. But even though we have a very strong connection to the beer network, in fact, those of you who know, we have a formal relationship with InBev, who bought Budweiser, a contractual relationship. They're our go-to distributor. But if we need to go outside that network, we can. We can go to Miller Coors folks. And then more importantly, we can go to the broadliners, because sometimes chains don't want to go through a DSD, a direct store delivery beer network or beverage network. They might want a Core-Mark or a McLean or a UNFI or a KeHE to deliver. So we don't leave anything to chance here. So we have vendor numbers, and we actually are customers of UNFI and KeHE, et cetera. So if the chain retail buyer says, you know what, I want to go through KeHE, boom, we execute. We'll have product on shelf anywhere in the country in 5 days. Very, very, very important level of execution. Not a lot of companies can say that. Even the big companies can't say that. Very proud of that. And of course, we have direct relationships with certain chains as well. And we even have our own B2B and B2C distribution platform to cater to the folks who don't want to leave the house and just have product delivered to them. Told you about the brands briefly. TapouT, hydration and recovery, as Anna introduced us. It's really a better mousetrap, I like to say. I have an old saying, but it's very true. All 5 electrolytes, and it's all natural. That's a huge distinction for us. And we're also priced premium to the Body Armors, now that Coke bought it, Powerade, Gatorade, et cetera. We believe we'll be the 4th leg of that table. And frankly, you know, when we were calling on Walmart for this brand, you know, we made them a commitment, with or without their desire, of maintaining a premium position to the other 3. So we're slightly priced premium to them, which is great, because retailers love that, because this has always been a loss leader category. Nobody makes any money in it. So we're in Walmart, for example, or Winn-Dixie or Kroger or whatever, where where Body Armor, Gatorade, Powerade might go on sale for 10 for 10. We won't do that. We'll go on BOGOs and things like that to promote the brand, but we're always going to be about 20 or 30 cents higher, which is aspirational for our consumer, and it's a better product. So ingredients wise, those are great brands. Don't get me wrong. I'm not knocking their brands, but the ingredients are better here. Salt, naturally flavored tequila. The only thing you need to think about here, really understand, think about what flavors have done for rum over the years and vodka over the years, and even today in brown spirits. Who would have thought that? I certainly didn't. But so flavors have been driving the spirits category for some time. Quality is the 3rd thing driving spirits. People want 100% agave products. They want single barrel bourbon, single malt scotches, et cetera. We are 100% agave, and we're 80 proof. Which is difficult to do when you introduce a flavor to a product. It's an all-natural extract. It's the essence of flavor, so it's not heavy or sweet or sticky like a liqueur. And of course, the tequila category itself is the most popular category in the spirits space right now, really driving the entire spirits segment. So we're really running downhill with the wind at our backs on this thing. In fact, we just got Buffalo Wild Wings in the Southeast U.S. We're starting with a small number of stores in Florida. We'll work our way across the country, which we believe, it's not a promise, but we believe will drive us into Brinker and Applebee's, et cetera, where the brand really will thrive. Our first acquisition was Copa di Vino. We call it the Shark Tank brand. The founder went on Shark Tank twice, didn't take any money. So we have a tremendous amount of halo marketing dollars that we don't pay for there. They run those segments constantly, almost 50 times a year. So mini marketing platform. But really, this was the innovation for the single serve wine category that's exploded today. And it's quality wine. It's not like the 4-packs with little 187 milliliter bottles in them. It's really a lovely product. Columbia Valley Wine, the founder, James Martin, is a tremendous winemaker. And these are very, very good products. And we're actually launching two new flavors right now, varieties, excuse me. And that acquisition came with a little brand called Pulpoloco. It's a lovely, lovely sangria. And it came with the rights to the only paper can that's fully sustainable, biodegradable, not just recyclable. This is a big deal. The ESG sustainable thing isn't going away, even if you wanted it to. And so we're very proud of that, but that we're going down that path to satisfy consumer desires there. But more importantly are the economics of it. Even with all the firepower we have with this small company, I can't buy aluminum back of 28, 30 cents for a can. This can costs us significantly less. Even importing it empty is about 8 cents. So when we start building that can here in the US, we think we can get that, probably cut that even in half. So imagine the positive impact to margins, and we'll put our other products in there that make sense. And then guess what? This is set up in its own entity. We'll sell that excess capacity to others. Walmart's actually asked us for an 18-month exclusive on this for some of their private label products. So it's a really exciting piece of this acquisition. I call it the storage war acquisition because we didn't know Pulpoloco rights came to it for the Carta can. So we bought this company, opened up the door, and wow, we got Carta cans. So that's great. I'm almost done. Bear with me. Of course, TapouT we talked about already. Some imagery here. Really, like I said, it's all 5 electrolytes, all natural, which allows us to play in the natural food channel too, which is very important. And if you think about the 3 brands, Gatorade, Powerade, and now Body Armor, we believe will be the 4th leg of that table. Slightly priced premium, a heritage name that people have known for many years, and that puts us in the white space. There's no competitor in there for mass market like TapouT. And those of you who follow us, Drew Breeze, who's basically a new friend of mine and the company's, is now our official face of TapouT. And he will be really engaging with us come first of the year. He's a great guy, tons of following, just the nicest man I've ever met. In fact, we're going to go fishing here in a few weeks together and really talk about next year. So we're really going to start stepping up the visibility on TapouT, and we're excited about that. Just some execution so you can see what it looks like. I believe these are Southern California Walmarts, I think. And then salt, we've already really talked about. Just some great imagery, but again, 100% agave and 80 proof, which allows us to keep our Mexican designation of official tequila, which is very, very important for the for the millennial consumer out there who wants quality. And we talked about also already the 3 key drivers. A little bit of visibility on how we execute on the brand. It's a lot of fun. I'll give you one quick anecdotal story and then I'll stop talking. We have a small chain on the west coast of Florida called Anna Maria Oyster Bars, five locations. They're doing 60 half cases a month with this product. And we're donating $1 to the Sea Turtle Foundation that we're very passionate about. But it's really, really a great brand. We're excited about the future for it. Copa, we've already talked about. We're up to 9 varieties now. Lovely product. And then sangria, Pulpoloco, as I mentioned. 3 flavors. We have a red, a white, and a rosé. They're really lovely, fantastically convenient package. You can take it to the park on a boat, put it in your pocket if you're skiing, whatever you want to do. And then I mentioned we have our own B2B and B2C platform. The genesis of this was to be prepared for when more and more state liquor license laws change. And so we're already positioned with pick and pack warehouses in California and New Jersey where you can sell beverage alcohol, without a third-party distributor like a Southern or a National. So we are positioning ourselves for that. That was the reason for it. But it turned out to be quite a nice little piece of business as well. So, Anna, I believe that is it.
Great job. Always exciting to hear the updates. And I like the Anna Berry's iced tea, but I prefer an Anna Berry's mezcal. I'm really into mezcal. So put that on your list.
All right, we can do that.
All right. So congratulations on all of this. You recently got into the Publix supermarket chain across the southeastern United States. So talk about how that impacts the company, knowing that distribution equals revenue.
Yeah, great point. Not just Publix, but Publix is a really important chain. I believe it's the largest company-owned, employee-owned company in the United States, but massively successful grocery chain. They build brands. But gosh, in the last probably 30, 60, 90 days, we've announced retail agreements with Southeast Grocers, which is Winn-Dixie and Food Lion, British Petroleum, AM/PM on the West Coast, Circle K, West Coast US have taken all flavors of Copa di Vino, and the list goes on and on. And yes, most notably, this last week, we announced Publix and also 7-Eleven coming on board for Pulpoloco, all 8,000 stores. We've been talking about distribution announcements and retail announcements for the last 6 months. And I get a lot of questions about that. What does that really mean for the company? Just like you asked, it's so critical because you have to set that distribution and that retail foundation up to really build brands. And so don't forget, everybody out there, when we announce a distributor, that's actually our customer. We have very few direct to retail relationships, and most beverage companies don't. Especially with beverage alcohol, you can't. It's against the law. So when I announce 9 new distributors to help us distribute to Publix, they're mostly Budweiser distributors. Each one of those organizations are now our customer, and the accounts receivable, the AR cycle, is very short. It's a 30-day window. So we'll start loading Publix stores at the end of the month and into January, hopefully at the end of the month, but most likely into January, and we will recognize revenue for that in 30 days. So it's very, very important that people understand these announcements really were setting us up for 2023.
Great answer. All right, we've got a question from David Figueiredo. I hope I pronounced that correctly. He's got one simple question. In your humble opinion, Robert, do you think 2023 is going to be your breakout year for Splash Beverages?
Yes.
One simple answer.
Yeah, absolutely. And it's due to the reasons I just mentioned. We've been setting up distribution and retail, really mostly through 2022. And understand it takes time. 20 years ago, you would get a retail authorization and you'd cut a deal with that retailer. Buy 10,000 cases and we'll give you 5,000 cases. I'm making that up. That doesn't happen anymore. It's just-in-time distribution. So it's a slower build. But once you build out that foundation and you really start to ratchet up your revenue very quickly, and we believe that will happen in 23.
Great. We've got a question from Dan Gente or Gente. You mentioned in previous filings taking advantage of a credit facility. Can you shed some light on this and the amount of the facility and the terms?
Yeah, to a certain degree, I can. So, and I'll say it this way: there have been a lot of questions about, investors asking questions about our cash situation and can we fund this growth moving forward. The answer is absolutely, and we can do that internally. So you'll see some news and announcements about the details of that here in the near future, but there's no need to go to the equity markets to do that. We have enough internal investors, myself included, that are willing to help fund that. But we've also engaged our commercial bank for traditional line of credits and things like that. And we also have on the sidelines factoring. Factoring is a way to build inventory and collect revenue without any sort of help from the outside. It's just cumbersome. So I just want to assure everybody that we know what we're doing. We've got that, and we will be very well organized for 2023.
Great. Dan also is excited to hear about your deal with Target nationwide. So talk a little bit about that rollout. How's it going? And when can they expect products in local Target area? I'm not sure where Dan is, but tell a little bit about that distribution process.
Yeah, I didn't mean not to mention Target when I was listing off all the retail support, but tremendous retailer. We love Target. They're basically, they just gave us the authorization about 45 days ago. So now we're working on the store list and planograms. That takes a good 2 to 3 months to get that done and organized with the buyer. So think about seeing product on shelf in Q1, probably the middle of Q1. So again, it goes back to the last question. All these retail authorizations really start hitting Q1, Q2. So we're very, very excited about that. And Target's a tremendous retailer, and they actually have spirit stores as well, not a lot. We're presenting salt and we're presenting salt to their spirit stores as well. So look for that mid Q1.
Great. Dan also wants you to talk a little bit about reorders.
Yeah, great question. The holy grail in beverage, or probably any space with consumables, is repeat purchase, right? Mm-hmm. The most accurate data we have so far is where we are in distribution with not Target, Walmart. Walmart gives us numbers every 2 weeks for the prior 4-week period, which is odd, but that's what they do. And those are public numbers, so I could share it. The same store sales where we are in distribution are off the charts. I've never seen it like that. So we're racing to get to as many Walmarts as we can towards the end of 22, and we'll really be focused against that in 23. So the same store sales are growing at minimum of double digits, and in most cases triple digits. That's a very, very good indication of brand health. It doesn't mean we're in the barn yet by any stretch, because it's very early. But it's definitely, in my experience with many, many brands, I've never seen an acceleration like this. Even at Red Bull, it took us 5 years before anybody really knew who we were. So we're really accelerating. The brand awareness and throughput is accelerating very fast.
And Dan, last question from him is any consideration for curating a bulk product for a brand like Costco or Target exclusively?
Yeah, we are set up beautifully to fulfill any sort of private label business that comes our way. I can't say who and what yet, because this is a public forum here, but we're actually speaking to somebody about something like that right now.
Great. Sabrina Gibbs wants to know, what's your cost to acquire a customer? And does it vary by brand? Also, can you discuss the difference in margins on your various brands in relation to the amount each sells?
Yeah, so customer acquisition is a measurement for our online B2B and B2C platform only. The beverage space doesn't necessarily measure that in a retail distribution environment. So when we put Qplash together, the group that we brought in to do it originally was working on about a $7 customer cost per $1 for customer acquisition, which is too high. We've gotten that down. I believe the most recent number is right around $3.20. So that's reasonable, and I'm happy with that. We actually have about, I think it's 180,000 active consumers now on that platform. And then I'm sorry, Anna, what was the second half of Ms. Gibbs' question?
Let me get back in there 1 second. Ms. Gibbs, you're fine. Discuss the difference in margins on your various brands in relation to the amount that each sells. Yeah,
okay. So I caution everybody to do margin analysis at this early stage by brand, because it's a moving target. It changes every day. But right now, I'll say our worst margins are in TapouT. But TapouT is the largest universe footprint potential of all these brands. Our best margin product right now, really kind of goes, it's really salt tequila. We make a very nice penny profit on that. And then right behind it is Copa di Vino and Copa di Vino. And the plan for, and those are right around 34%, 35%. And then Pulpoloco is right behind that. Now, when we build Pulpoloco here in the US, somebody asked something about bulk wine. Ultimately, we'll be rolling those paper cans here in the United States instead of importing them. And then we'll import bulk wine from Spain. It's a family recipe, actually. And we've also announced that we're buying Pulpoloco from the founder. In fact, he's in town right now. And we did announce that publicly. And that'll cut out another 1.5 layers of margin. So I'm giving you all these examples, Ms. Gibbs, because it just changes literally. It's so dynamic. It changes almost on a weekly basis. Ultimately, we'd like to be in that 20% range on a consolidated basis of pure net margin. And we'll get there. We're accelerating that every day. We're working on raw material cost of goods on a daily basis. In fact, our bottle for salt tequila, we just carved out about 70 cents per bottle with a different glass manufacturer. So that's a material number. So it's a great question, and I'm dancing around it, not to be evasive, but it just moves literally daily.
I can't imagine. Well, this is a really thrilling presentation. Happy to have these updates. Robert, do you have any closing remarks for our viewers?
No, I just encourage everybody to think about the team that's in place here, our management team, our board. We're not here to build a $30 million company. So everybody who jumps in, remember a company like Celsius, phenomenal success, right? I love those guys. That's a 12, 13-year-old company. So I'm not saying it's going to take us 12 or 13 years, but it takes time. So anybody who's interested in coming aboard, I encourage you to buy and hold and watch what we do.
Wonderful. Well, thank you so much. Wishing you Merry Christmas, and we will see you in 2023.
Merry Christmas to everybody out there. Happy holidays, and thank you so much for your time.
All right. Thank you, Robert. Okay, everyone. Thank you. We'll be right back with our next presenter. Stay with us.